Accounting. Accounting and Other Business Techniques for Entrepreneurs. Written by Gerard Howles and Nathan Sides. Narrated by Wes Grant and Chloe Jacobson.
Accounting. How to calculate rollover risks, credits, leasebacks, and other financial variables. Written by Gerard Howles. Narrated by Wes Grant. Chapter 1. Netting. What is netting? Netting involves offsetting the value of multiple positions or payments due to be exchanged between two or more parties. It can be used to determine which party is owed reimbursement in a multi-party agreement. Netting is a general concept that has certain more specific, figured out, including in the monetary markets. How netting works. Netting is a technique of reducing risks in financial agreements by combining or aggregating multiple financial commitments to come to a net responsibility amount. Netting is used to decrease settlement, credit, and other financial threats between two or more parties. Netting is typically used in trading, where a financier can balance out a position in one security or currency with another position either in the same security or a different one. The objective of netting is to balance out losses in one position with gains in another. This is an example. If a financier is brief 40 shares of a security and long 100 shares of the exact same security, the position is net long 60 shares. Netting is also used when a business applies for insolvency, whereby the parties tend to net the balances owed to each other. That is also called a set-off stipulation or set-off law. In other words, a business working with a defaulting firm might balance out any cash they owe the defaulting firm with cash that is owed them. The remainder represents the total amount owed by them or to them, which can be used in insolvency proceedings. Companies can also use netting to simplify third-party invoices, eventually lowering several billings into a single one. An example would be the following. Some divisions in a pretty big transport corporations purchase paper supplies from a single supplier, but the paper supplier also uses the same transport company to ship its items to others. By netting how much each part...
Sample complete. Ready to continue?